uh, so I want to thank everyone from the Wall Street Silver community. We have an incredible guest, Chris Powell from the Gata community. Chris, how are you doing today? And again, just you, if you want to explain Gata to the whole Wall Street Silver community, that would be huge.
Oh, well, it's great to be with you guys. I'm thrilled by your interest. The Gold Antitrust Action Committee was founded in, late 98, incorporated in, I guess, January 1999. We are a uh, educational and civil rights organization recognized by the Internal Revenue Service as a 501c3 organization. So contributors can get a tax deduction if they care to help us keep going. We operate on donations and file our taxes publicly and register as a charity here in Connecticut. We were founded to expose and oppose the rigging of the gold market and related markets. Originally, we thought that it was a standard antitrust operation by the major investment banks that traded gold heavily in New York. After a year or two, we began to realize that the investment banks were mainly just brokers for the government, that gold price suppression was a long-standing government policy, and we were embarrassingly ignorant of that policy when we got started. Since then, we have amassed an enormous archive of the documentation of this gold price suppression policy, which bears pretty heavily on silver as well. We have sued the U.S. government and Treasury and Fed, and a couple of times. We sued the Bank for International Settlements once. That suit against the BIS and the Fed and Treasury got dismissed on a jurisdictional technicality, but not before an assistant U.S. attorney got up in open court in Boston in 2001 and moved for dismissal of our lawsuit on the grounds that the U.S. government claims the power to rig the markets exactly as our lawsuit complained.
No way.
That this was fully authorized by the Gold Reserve Act of 1934, which created the Exchange Stabilization Fund. The law was subsequently amended. So I thought that admission that we got in the first lawsuit was pretty telling. I guess about 10 years ago, we sued the Federal Reserve for its gold documents. And
Did that one get dismissed too? Sorry for cutting you
no,
off.
no, no, that we won that lawsuit against the Fed. At least technically, we won it.
Nice.
The judge in U.S. District Court in Boston, I'm sorry, U.S. District Court in Washington, ruled that nearly all the Fed's gold documents were exempt from the federal Freedom of Information law, but one was not exempt. It was the minutes of the G10 Gold and Foreign Exchange Committee meeting, I think in 1997, which showed that the central bank people and the Treasury people from the major economic powers in the world had a meeting in 1997, a secret meeting, of course, to coordinate their gold price control policies. That was pretty telling, but even more telling, I think, that lawsuit began with a Freedom of Information complaint to the Fed. And in the pursuit of that complaint, we elicited a letter from a member of the Federal Reserve's Board of Governors, Kevin M. Warsh, who seemed to be acting as a hearing officer on our complaint. And he wrote a letter to our lawyer saying that among the documents that the Fed was refusing to disclose to us were records of the Fed's gold swap arrangements with foreign banks. So at least we got an admission at that early stage that the Fed was, surreptitiously involved in the gold market through gold swaps, because we technically won the lawsuit on the basis of the G10 gold and foreign exchange minutes that were improperly withheld from us. The court ordered the Fed to pay us court costs. So we proudly display on our internet site a check from the Federal Reserve Bank of Richmond, Virginia for something like $2,200 payable to the Gold Antitrust Action Committee, showing that you can fight the Fed and win. But since then, we've mainly compiled documents, evidence of surreptitious intervention against gold and sometimes silver by central banks. We've amassed a pretty comprehensive archive, and the more comprehensive and incriminating it becomes, the less the financial news organizations will pay any attention to it.
Now, Lee, do you have a question for Chris?
I have a ton of questions for Chris. First off, you mentioned some documents. Is it possible for us to share with our community some of those documents to kind of educate people as to what's been going on, what you've been doing?
Yeah, can they be made public?
Oh, yes, absolutely. That's what we do. If you go to our internet site, gata.org, in the top left column of the internet site, you'll see two sections. The first section is called the basics. And if you open that up, you'll find a very recent comprehensive summary of gold price suppression policy. It's an updated version of a summary I wrote, I think, about 10 years ago. This one was written just a couple of months ago. This outlines the policy, its history, and contains links to many of the major documents. If you go back to our homepage, in the top left column, you'll see another page labeled documentation. Mm-hmm. And if you open that up, you'll have access to the entire documentation file.
Now, Chris, what do you say to people who say there is no manipulation in the silver markets in the industry? What do you say to them?
Well, they can't have been reading the papers lately or even watching television. I mean, a few months ago, JP Morgan Chase got fined $920 million by the U.S. government for rigging the gold and silver, and I think the treasury markets as well. There's a bunch of other bullion banks who've confessed to gold and silver market manipulation and paid pretty big fines as well. So certainly, this market manipulation in regard to gold and silver is extensive public record. In fact, I have to wonder if there aren't more bullion banks that have confessed to market rigging and paid big fines than there are bullion banks that have not confessed to market rigging and paid big fines. But in fairness to the people who question us, I must admit that our documentation of gold market rigging and intervention by central banks is overwhelming. It includes confessions by central bankers themselves. Our evidence linking central banks to silver market manipulation is very weak. I think there's a lot of circumstantial evidence that this could not be happening in silver if governments weren't involved in it. And I can go through that evidence, but we do not have in silver quite the smoking gun that we have in gold.
I would think gold is probably a more important monetary metal for the central banks, just because of the concentration of wealth, I guess, per ounce that it represents. I'm kind of having a conflict in my head where the government's the one who is kind of organizing this manipulation, but then on the other hand, they go and they fine JP Morgan and the other banks. Was that more like a slap on the wrist to kind of just divert people's attention?
Well, speculating on the government's motives, that's a fair suspicion. However, I long have thought that JP Morgan has as much on the U.S. government as the U.S. government has on JP Morgan. I mean, JP Morgan is not just a primary dealer in U.S. Treasury securities. It is an intimate agent and long has been an intimate agent of the Treasury Department and central banks. I mean, whenever there's a problem in the markets, the U.S. government turns to Morgan and sometimes others to help resolve it through government intervention. Now, I will be very surprised if any bullion bank is doing anything in the gold or silver markets now on its own without really doing it as a broker for the U.S. government. One of the very strong pieces of documentation that we have is the central bank incentive program, which is operated by CME Group, which runs all the major U.S. futures exchanges. You can find the central bank incentive program confirmed on the internet site of the Securities and Exchange Commission and the Commodity Futures Trading Commission. You can find it confirmed on CME Group's internet site itself. And what it is a system of volume trading discounts given by CME Group to governments and central banks for their secret trading of all futures contracts in the United States. Mm-hmm. And the program says that to participate in this program, governments and central banks have to act through brokers that are approved by the exchange. So, we know from the central bank incentive program that the bullion banks would be functioning as government agents if they were intervening in the market on behalf of governments. They would be trading through these brokers that have been fined by the government for, probably front running the government's own trades. That's what I suspect that the spoofing thing was really about. That you had the brokers executing government trades and then decided to start front running them for their own profit. That's just a guess, but this stuff is extensively documented, and it's just as extensively ignored by the mainstream financial press.
Now, Chris, what's the next move for Gata? The last case you said it got dismissed, correct?
No, our first case in 2001 was dismissed on a jurisdictional technicality, but we did get the government's admission in that case that it claimed the power to rig any market, just as Gata was complaining of. And our second case against the Fed, we technically won, and we have the check of court costs on our internet site to prove it. The next step, well, I am feeling very frustrated right now. So it's our chairman, Bill Murphy, that we come up with smoking gun after smoking gun, and the financial press just won't touch it because it's the most radioactive issue in the world. It's been suggested that Murphy and I should strap ourselves with explosives and go visit the Treasury and the Federal Reserve, and that maybe they'd cover the boom.
It's crazy because you're right. You're absolutely right. No mainstream kind of thing will actually touch these stories. Which is kind of surprising and shocking because just in Wall Street Silver community on Reddit alone, almost 50,000 people in 2 months have gathered, and we're breaking news that the mainstream media isn't. So that's a huge thing. Lee, do you have any questions for Chris?
Sure. Why don't we talk about the current situation with the central banks? It seems like they're almost at a point where the interest rates are just going to be pushing on a string and not really getting anywhere. Negative interest rates are being talked about. And then, the World Economic Forum talked about the Great Reset. Obviously, the central banks are pretty cognizant of what's going on with the currencies and the potential collapse of the U.S. dollar. They're talking about the digital dollar and the like. Where do you see gold's role in that? Do you think that they have been acquiring gold, and that's why they've been suppressing the price of gold in order to kind of reset everything? When the digital dollar comes out, they back it on gold. They can jack up the value of gold at that point to kind of reflate the balance sheets.
I'd refer people to two academic papers that are posted on our internet site. The first one was written, I think, around 2005, 2006 by a Scottish economist, Peter Millar. Millar was showing how central banks use gold periodically precisely to devalue their currencies and to avert debt deflations, because the logic of a fiat money system, which is based on debt, is that the debt eventually compounds to such great amounts that it devours the real economy of the world, and governments have to devalue their currencies, devalue debts, and they do it by devaluing their currencies against gold. This has happened before. This is exactly what President Roosevelt did in 1933 and 1934, devaluing the dollar by upvaluing gold. Then there's the speculative paper that was written, I think, 2013 perhaps, by the U.S. economists and fund managers Paul Brodsky and Lee Quaintance. Brodsky and Quaintance speculated. They didn't really provide any evidence, but it was very plausible speculation, I thought, that the real central bank scheme was just pretty much what Miller had said, that the central banks, even as of like 2013, were actually redistributing the world's gold reserves among themselves in order to hedge the big dollar surplus holders in central banks against a devaluation of the dollar. Brodsky and Quaintance argued that the gold bugs should stop complaining about gold price suppression, that this certainly was a central bank scheme to facilitate their redistribution of gold reserves and to obtain more gold for themselves prior to some kind of reset of the monetary system, really another devaluation of the currencies, a devaluation of debt. And in this reset, the governments that had a lot of dollars in their foreign exchange accounts would suffer big losses on the devaluation of the dollar, but they would be hedged by a equal or larger upvaluing of their gold reserves, so that they would come out ahead. Other, I think, economists, Jim Rickards and other people have speculated along the same lines that one way governments can get rid of their debt is by upvaluing gold and paying it off in gold. If governments decided that gold, instead of being worth maybe $1,700 an ounce, is worth $5,000 or $10,000 an ounce, you can pay off a lot of debt with that all of a sudden. There was a central bank, a Federal Reserve Board member whose name I can't quite remember right now. I can look it up for anybody, but he went on Business News Network in Canada, I think about 10 years ago, and he was asked about the exploding balance sheet of the Federal Reserve, and he volunteered that the Fed had these gold certificates from the Treasury, and that if gold was valued on the Fed's book at its market value and not at $45 an ounce or whatever that is for the current technical valuation on the Fed's book, then the Fed's balance sheet would look a lot better with this upward gold revaluation. And that was volunteered by a member of the Federal Reserve Board. And I should have prepared better today and remembered his name, but it's on our internet site. I remember transcribing his comments off the BNN broadcast, which is no longer available, that I know what we have on our internet site is correct, because I spent a lot of time taking those quotes down. But even a Federal Reserve member mentioned, in public, volunteered that the Fed's balance sheet looks a lot better if gold is marked not to the artificial price, but to a market price.
Now, Chris, do you currently stack any physical silver?
Oh yes,
Nice.
I have gold and silver. In fact,
Oh yes, there we go.
I just love it when our guests just can pull it right out.
Oh look! Oh, that looks beautiful.
I don't know if you can see that. It's a
there we go.
Big
Oh,
10-ounce
maple.
Britannia coin, and
it's Britannia.
here's another Britannia silver coin that I just happen to have sitting on my desk as paperweights here. But
Nice, that's perfect.
I do have what's for me a fair amount of real coinage, and then some of my assets, really a lot of my assets, are in gold and silver ETFs, the spot ETFs anyway, not SLV. I think people have learned their lessons on that, but I do have some money in PSLV and PHYS. I trust the SROT people to actually have the metal safe at the Bank of Canada in Ottawa.
So we have an interesting story. I went on your website this afternoon to, just get some refresher information about your organization, and you have a story about the Mexican central bank stopping production of the silver libertads, and we posted that on Twitter, and it's kind of gone viral. So we appreciate the scoop on that.
Well, don't thank me. Thank Hugo Salinas Price for that. He alerted me to it last night. Hugo's family runs Banco Azteca, which has been selling the Libertads in Mexico on a retail basis for many years at Hugo's insistence. And Hugo wrote me last night saying that they can't get any more from the Banco de Mexico because they've stopped production, claiming that it's a coronavirus problem. Well, of course, the U.S. Mint has reduced or suspended production of gold and silver coins in recent months with the same excuse. And, we have to be suspicious of that because, I'm sure there's gold and silver out there and it's available for purchase at a higher price. And if the U.S. Mint or the Mint for the Banco de Mexico wanted to get gold and silver for minting silver coins, all they got to do is raise the price. I told somebody today who asked me about this, the gold and silver that has been put into coins and bars for the last few thousand years is not, taken off for, Mars or the moon or something. It hasn't disassociated into atoms and molecules. It's still in somebody's vault. It's still under somebody's bed. It's around, and if you want to pay for it, it'll come out.
I mean, we had a similar situation at the Perth Mint now happening. Over the past months, members of Wall Street Silver have done a great job buying up the stock at a lot of the bullion retailers. Kind of the foundation of our forum is the thought of buying up silver. Yeah, and you've seen the spot price and the retail price per ounce diverge like it hasn't in a long time. Do you think that there's actually becoming a shortage of silver in the marketplace right now?
Well, it doesn't matter what I think. You just go on the internet sites of the coin dealers and find out that the Kitco may say the silver price is $25, but try to get a 1 ounce silver coin for anything less than $35. Now we've had these divergences before between retail coin and bar sales and the nominal futures prices, and they have closed up again over time. But there have been a lot of strange developments in the gold and silver market over the last year, which suggest an extraordinary tightness in the market. There are people saying that they can't get delivery of their orders in London from LBMA members. There was the big shift at the COMEX from local delivery to exchange for physicals, which were claims on gold kept in London. And the COMEX started offering a 1,000 ounce bar contract for buyers of contracts there that really couldn't be split up. You can't split up 1,000 ounce bar to get 250 ounces out of it if that's what you want to buy. So there's just a lot of strange things going on lately, suggesting a very tight supply. We do know it's a matter of record that central banks in the last couple of years have turned from net sellers of gold to net buyers of gold, at least as to what they report publicly. So it stands to reason that there's probably some tightness in the market right now. I don't remember the divergence between the retail price and the futures price being as great as it is now. And certainly I've been following this fairly closely for 20 years. Certainly the offtake for gold and silver at the COMEX is reaching record proportions. Bob Lamborn, who was our consultant about the Bank for International Settlements, calculated on the basis of the BIS's February statement of account that the BIS's involvement in the gold market, as represented by its gold swaps and derivatives, has reached a record level, more than, I guess, 550 tons in gold swap and derivative obligations at the BIS. It's never been that high. All this stuff does suggest a certain amount of strain in the market. I'll give you another example. What was it? A few weeks ago, I wrote to the Bank of England, which sometimes has answered me in the past, asking, hey, are you guys, or the UK Treasury, have you guys been leasing gold in the past year? And have you called in any gold leases in the past year? A couple of weeks passed, and I got a reply the other day from somebody in their press office saying that she's afraid that there's just no more information about this that's available right now. So,
she didn't want to tell you anything.
Well, of course, it was a very polite way of saying I should go do something nasty to myself.
Lee, do you have any more questions for Chris?
So our group is predominantly under 40. I think, what would you say, like 70% under 40. A lot of them are somewhat new to the precious metal space. Is there anything that you would like to tell that demographic about precious metals?
Well, I hesitate to say anything that sounds like let's you and them fight. I mean, I do have a fair amount of my life staked in this as well. Craig Kemke repeated this week that if you're doing God's work, if you buy physical and take it out of the banking system, that's the only thing that's going to beat the bastards. The whole gold and silver price suppression scheme is based on government sponsorship of the creation of vast imaginary supplies of the monetary metals that people are content to leave on deposit at bullion banks. And as long as people say that you can't print gold, you can't print silver, and they don't understand that governments and bullion banks do print gold and do print silver and have created this vast imaginary supply, then the scheme can go on forever. But if you take metal out of the system, put it in your basement or your attic, or bury it, or keep it in a vault somewhere, if you hold it with the Sprott funds or a reputable ETF, well, then you're taking metal out of the banking system. You're forcing deleveraging of the whole derivative structure. This is how the London Gold Pool collapsed in March 1968. That was the public scheme of gold price control in the 1960s in North America and Europe. And people began to realize gold was underpriced. They began to buy gold. They were forcing the Western central banks to dishoard real metal, and the demand became so great, and the distorting speed was so worrisome to the Western central banks. In March 68, they had to close the London Gold Pool for lack of physical metal because there was too much demand. That's what will break this fraudulent system. So, I congratulate you guys and thank you. And I hope we will see the day when people realize that they've been printing gold and they're not going to get away with printing it anymore. And the same with silver.
Now, Chris, if you don't mind me asking, what got you started into your career path? What was your first job, if you don't mind me asking?
Oh, well, I've been a newspaper reporter and editor really all my life since I got out of high school. I stumbled into this issue back in 1998 because I think I saw an ad in one of the financial papers, maybe it was the Wall Street Journal, where give us $10 and we'll get you free trial subscriptions to a dozen financial newsletters. And I was looking for contrarian investment opportunities. Not that I had a lot of money, but I was of an age where I should start putting some money away in a retirement account. Not that I want to retire, but one of the letters I got was Jim Blanchard's gold newsletter, which is now published by Brian London, who is really a student of Jim Blanchard. Jim Blanchard's really the hero who got gold re-legalized in the United States back in 1974. Blanchard was saying in 98 that, boy, the gold price was really low, and I had heard somebody say buy low and sell high. So I took a subscription to Gold Newsletter and started following the gold market. And pretty quickly on the internet, I bumped into Bill Murphy's new internet site, lametropolecafe.com. Bill was a former futures trader. I began reading his daily commentaries, and Bill started writing that, you know, these markets were being rigged, that every time gold and silver reached, you know, what he called some kind of strategic price point, the same parties, the same bullion banks would come in and smash the market down. At the newspaper, I had some experience with antitrust law because we were a local independently owned paper that, you know, was always being beaten up on by the chain-owned papers that were trying to deprive us of syndicated features. We'd had to bring some antitrust lawsuits. So I knew something about antitrust law from my experience at the paper and, you know, from my history courses in college. And I got finally tired of Bill complaining about the rigged market every day. And I wrote him a note saying, look, there's a lot of evidence for what you're saying, but if what you're saying is correct, it's against the Sherman Act and the Clayton Act and 50 state antitrust acts. And instead of you complaining about it every day, somebody ought to hire an antitrust law firm, have them sue the bastards on a contingency basis and collect triple damages. And if somebody wanted to start such a committee, I would donate $500 to it. And Bill thought that was a, you know, good idea. So that's how Gata got started. And then, you know, really within a year or two, we found out that, oh, you can't sue them because it's really the government, and the government in 1934 authorized itself to rig every market in the world, especially gold.
Lee,
so we had to fight them in another way.
That's incredible. Lee, do you have any more questions for our friend Chris?
I have a lot of questions, Chris, for
Nice.
you. My biggest question is, will you come back on our show maybe in a month or so?
Of course. I mean, you know, we exist to spread the word, and you know, I get tired of running my mouth sometimes, but this is a big new audience, and it's certainly my duty and pleasure to be available to you guys whenever you want.
Wonderful.
Well, we thank you so much, Chris. We actually just posted on Reddit and on Twitter for Gata, like the breaking news. So it's really, really nice that you're sharing the information. Again, can you give us your website exactly?
Sure, gata.org. We invite people to subscribe to our daily newsletter. You can do that in the top right corner of our homepage, and you know, you can unsubscribe from those letters anytime you want. It's no charge to them. If you like what we do and you want to help us out, there's a spot on our homepage where you can contribute to us by credit card or check, or I guess even Bitcoin now if you want to do that.
Nice, nice. Well, we thank you so much, Chris. It was a huge, huge pleasure from everyone, us from the Wall Street Silver community. Thank you, Lee, as well. And we hope to talk to you soon. This is just the beginning. There's for sure going to be more news coming out, I guarantee you, in the next month. And we really appreciate you coming around, Chris.
Oh, I'm very glad to have been with you. Thank you guys very much. And
thank you.
Thanks to all your supporters.
No.